Bank of Canada publicly admitted that house prices need to come down. That's everywhere right now. And people are kind of panicking. But here's the thing. They read the wrong part of that statement. Three forces are colliding in Canada right now. Rising oil prices, softening job markets, and record household debt. It has the Bank of Canada completely stuck between two very bad options. What they choose next is going to hit your mortgage one way or the other. Here's what's actually happening. Today I'm breaking down three things. What the Bank of Canada actually said and what they actually meant. Why they probably can't hike rates right now even if they want to. And what this realistically means for your mortgage, whether you're renewing, buying, or sitting tight. This isn't a clear sky situation, but the sky isn't falling either. So let's get into it. Let's start with the quote that broke the internet. The Bank of Canada said, and I'm quoting directly here, "We do need them to settle down a bit for housing to get more affordable." That's it. That's the quote. And the internet heard, "Crash incoming. They caused a bubble. They're coming for your equity," which in my opinion is wrong. Here's the thing about affordability. It improves in one of three ways. One, prices drop hard. That's the crash scenario that everyone is screaming about right now. Two, prices stay flat while incomes catch up. Quiet, slow, and generally the most painless option. And then there's the third option. Prices drift significantly lower over time, and it's a soft reset. The Bank of Canada is betting and hoping for option 2 or option 3. Not a crash, not a forced drop, but a slow rebalance. They even said it, stability, not punishment. So why is everyone panicking? Well, it's because fear-based content generally gets clicks, which I totally get. And I mean, if you look at some of my previous videos, yeah, there's some fear baked into thumbnails and titles and the video in and of itself. But your financial decisions deserve better than just that. So that's why I'm making this video. I don't want you to panic. I want you to watch, observe, and pay attention. The Bank of Canada is quite literally stuck, like completely stuck. And understanding why tells you everything about where rates are potentially going to go. Right now in Canada, unemployment is at 6.7%, which is high. We just lost 84,000 jobs. Inflation is at 1.8 to 1.9, which is low for now. And the normal playbook would say in this sort of situation, weak economy, cut rates. But here's the problem. Oil prices are rising. Middle East conflicts with the United States is driving energy costs up. And energy inflation bleeds into virtually every transportation, groceries, your heating bills, your housing costs, construction, everything is tied to transportation and oil. So if the Bank of Canada cuts rates now, they risk reigniting inflation that they just fought so hard to get back down by jacking rates up like crazy. If they hike, they crush an economy that's already losing jobs at an accelerated pace. There's only one real move left: to hold things, to sit, to watch, and to wait. And to be honest, that's not weakness. That's math. And to be fully honest about it, for most of you watching this, that's actually really good news. Now, here's the part that keeps me up at night. Not because it's catastrophic, but because almost nobody talks about it. Rates don't need to go up for your mortgage to get more expensive. I'm going to say that again. Rates do not need to go up for your mortgage to get more expensive. Here's why. Variable rates are tied directly to the Bank of Canada. If the bank holds, variables hold, and that's that. Fixed rates, however, are a completely different story. Fixed rates are driven by bond yields. And right now, bond markets are already pricing in possible hikes because of oil-driven inflation risk. So even if the Bank of Canada does nothing, the bond market moves, and then fixed rates move with that. Markets are hedging, economists are expecting holds and pricing those in, but hedging still costs you if you're looking at fixed rate mortgage products. If you have a renewal coming or are looking to buy in the next 6 to 18 months, getting a rate hold is very important because we've already seen fixed rates go up by, in some cases, over 0.5 percentage point in as little as 2 weeks. This is not the time to cross your fingers and hope. This is the time to build strategy and explore your options. If you've been sitting on the fence, prices are still down, and you can always renegotiate a mortgage rate 3, 4, 5 years down the road. You can never renegotiate that purchase price. So if you're on the fence of buying a house, now could be a good time to explore. and make sure you're working with someone to get those rate holds. So what does this actually mean on the ground? Most likely scenario, rates stay flat. Housing softens, affordability improves slowly. It's not a boom, it's not a crash, it's a transition. If you're a buyer, you're not getting the fire sale people promised you, but you're also not fighting 40 other offers. This is actually a functional market. And if you're a seller, well, the market's softened. You need to price accordingly. Don't get emotional. Don't get attached. If you want to sell your house, trust in your real estate agent to tell you what to list for. Now, if you're renewing a mortgage, this is a window to have a real conversation, because making a passive decision right now could end up costing you thousands over the next 5, 3, or 4 years, whatever your term ends up being, because we are seeing fixed rates go up. And unless you're comfortable with that variable, you're going to see higher fixed rates down the road. And to be honest with you, that's the real risk here. Not the crash that isn't coming. It's choosing to do nothing when doing something could actually protect you. The Bank of Canada is not trying to crash your house. They're trying to land this plane without wrecking the economy. The question isn't what they're going to do. The question is, are you prepared? Or are you just sitting, watching, and hoping? If you've got a renewal coming up, or if you just want to talk to someone about what this actually means for your specific situation, whether you're buying a house, selling a house, and moving, or whatever you're doing, there's a link down in the description below where me and my team would be happy to book a call with you so we can discuss your options and take a look at exactly what we can do and walk you through your own unique situation. And if this gave you more clarity than the panic content that has been out there, make sure to like, comment, and share so that more people like you can see this video. Thanks so much for tuning in. We'll catch you on the next video. My name's Myles Nowik, owner of the Nowik Mortgage Team, powered by Andy Mortgage. Have a great day.